How's it, guys? Welcome back to FX Rhapsody. Today we're going to be doing analysis on the USDJPY, USD dollar, Japanese yen. Before we hit the charts, just go visit my website. It's on the bottom left corner over here. For those of you that's starting out on trading, there's some nice video categories to go watch, some nice reading material about trading that will get you nicely set in your trading career. There's also resources to be downloaded. We're going to be using the COT reports on our analysis today. So just go to the resource tab, go download that COT report. It's for free. And then also the preferred brokers, guys. These guys are absolutely brilliant when you need a reliable broker behind your side. Okay, so let us hit the charts. So we're looking at US dollar, Japanese yen. Okay. We are starting on the 4 hour. We're going to work our way to the 1 hour and then to the 15 minutes. And I will show you why. Now, looking at the 4 hour, this was the start of the week. Okay. Now, before we go and look at what happened during the week, let's look at the COT reports first. Okay. We can see on the Japanese yen side of things that now let's look back to last week, because obviously we're going to look at what happened this week. So last weekend, COT reports showed that there is a negative movement in the net positions. So basically, you had some longs that was closed in the market, but more shorts. So the movement in the net positions went from a negative 68,000 to a negative 61,000. Now, what does that mean? For us, looking just at the Japanese yen, it means that it's going to be weaker because you looking at the US dollar versus Japanese yen. And if the Japanese yen on the COT report shows a weaker net position, that means the US dollar is going to be stronger for that week. Okay, that is just, it's not always the case, guys, but I mean, that's a good indication to where all the big money is pushing the market towards. If we look at that and we have a kind of idea, okay, the market is going to go up. So I'm just going to zoom out a little bit. So where is the market going to go to? So first of all, I'm just going to mark this area in the market. Okay, that's our high in the market, our previous high in the 4 hours. So first of all, market wants to, or smart money wants to go push and take out some liquidity that's lying above that. Okay, then we look back and we look at our previous highs as well. I'm just going to highlight all these areas in the market. Okay, that's another high in the market. That market might, or price might push up to go take out that liquidity that's lying on top. Then if we look back again, and this is quite interesting. So you zoom out. I'm not going to go to the daily time frame. I can, but I want to just show you on the 4 hour. You've got all these highs in the market. That's going to be, that's already taken out, but there's another one over here. Okay, so I'm just going to just have these in as dotted lines. So I'm just going to have that. And then looking back even more, you've got all these highs. So you can start highlighting them out if you want to. But when price moves up to from a bearish movement to an upwards movement, to a bullish movement, you want to have these areas in the market just highlighted, just to know that, okay, that's the area that I'm going to be starting to target. Price might go tap that out. Over here, we've got another high, but then we've got a fair value gap. Now this fair value gap, I'm just going to do that and then do this. Okay, that's a gap in the market. So if I move this sideways, you can see that this gap was never filled. Okay, I'm just going to keep moving it sideways so that we can just have that in as confirmation. So this is what I'm just doing on a higher time frame. You just need to highlight all these areas in the market, just to make sure that when price is moving up, these are areas in the market that you're going to target. So I'm just going to make this a little bit lighter so it doesn't just overpower our chart. Just going to make that. Just going to make sure that this is showing on all time frames. Okay, all of the time frames. And I'm just going to do that. There we go. Oh, excuse me. There we go. So now I'm, quite confident this is going to be showing on all time frames. Just going to make sure this is also showing on all time frames, because I'm trading on different time frames. I'm not concentrating on one time frame, and this is why I'm just taking time on this currency pair. I just want to show you how important it is as well, just to not focus on one time frame. So we've got that areas in the market. So we looked at the COT reports. We see that, or we have a view that price is going to start moving up in the direction. Okay, so the start of the week shows that there's some movement in the market, and for the 4-hour time frame, lo and behold, it's going to go and take out those areas in the market. It goes nicely to that fair value gap, and then it starts moving down, as you can see. So that is on the 4-hour time frame. Those are the areas in the market that you want to target. You want to target all those highs, and then you want to have those fair value gaps that have never been taken out, because price gets drawn to those fair value gap areas in the market. I've shown you countless of times how that works. So always have that in, but try not to overpower your chart or make it that it's analysis paralysis, that there's too many lines on the chart. So you have a clear view to that is where the market is going. We saw the COT reports. We saw just now that how price just moves in that direction. So on a higher time frame, this is what you need to do. Okay. Then for your trades or placing your trades, let's go to the lower time frames and see how we can do that. Okay, looking at the 1-hour time frame. So now on the 4-hour time frame, we have got our areas in the market pinned out. Okay, this is now the start of the week. Again, we did our analysis in the start of the week. We looked at COT reports. We kind of, had an indication to where market might be going. We highlighted areas in the market. We have them up there. So now we wait for opportunities to go into the market. So, excuse me, this was now the end of last week. So the beginning of the week, we saw price, and then, like I said, I always draw these little lines just to see, if I have some kind of a break in structure. If I use my Fibonacci tool, I use fair value gaps, and then that's the method I use to enter my trades. Okay, so we look at the 1-hour time frame, and we see that price still, is in that consolidation phase, and price starts breaking out. So now you look for buy opportunities, because we can see a movement upwards already. We know that from the COT reports side of things, or the higher time frames, we know the price is going up. Okay, but like I said, it's not always 100% sure. So you need to have more and more. The more confirmation you have, the better for you. The better you will be when you when you place your trade. You will be more confident in placing your trades. But the more information you have on your hands to where you think price might be going, okay, that is then it makes your trading so much more stress-free, if I can say that. So we have got a break in structure, we have got a retracement, okay. But now, if I take my swing low to swing high, we see price going, and then price just shoots up. So now, on a 1-hour time frame, if you only had to trade the 4 hours and 1 hour time frame, the method that I'm using, that's a trade lost. Not lost, but missed. Okay, because price did not retrace back to that 62% in a similar fashion over here. So we have got a swing low, and then we have got a swing high over there. But then again, you're missing the trade. There's no trade opportunities because you're waiting for that retracement to the 62%. Price has already started moving up. Price is already going and tapping that liquidity. So just by trading on the 1 hour time frame, you will not have traded or placed any trades for this currency pair, knowing that price is going up, knowing that you need to look for buy opportunity. Where are you going to place your trade? Okay, just to have more confirmation to, not just, placing a trade over here or placing a trade over there because you can see price going up. That is gambling. Don't just, trade because, or place a trade because, okay, I've got a feeling price is going up. I did my analysis on the 4 hour time frame or daily time frame or whatever the situation. I looked at the COT reports. I know price is going up. It does not work like that. You need more confirmation. You need confirmation of placing a perfect trade, not just or close to perfect, to have the a minimal drawdown for your trade to be going in the right direction, for just to have that sense of relaxation when you trade, and just to be calm in the market. If you had to place a trade, if you know that price is going up, and now you place a trade right there because you can see market is going up, you place your buy trade over there, you're going to have some big drawdown depending on your size of your account. in your equity in how you want to trade. So now you see price going down. So, oh, is it in the right direction? Oh, no. Then you climb out of the trade. And as soon as you do that, you see price moving in your direction. That is when traders are just, thumb sucking where they want to place the trades. It does not work like that, guys. So let's go to the 15 minutes where I want to show you where you could have entered this week, not having any trades on the 1 hour or even the 4 hour. You know the direction. But let's just go to the 15 minutes and I'll show you. Okay, 15-minute time frame. So we did our analysis on a higher time frame. We know that price is gonna, or we've got a, what's the word I'm looking for? We've got a positive feeling that price is going to move up. It's going to be a bullish market. We looked at the COT reports. We see prices going up. We are keeping an eye on the 1 hour time frame for any trading opportunities because it does happen on the 1 hour time frame. I have showed you that a lot of times. But then we also keep an eye out on the lower time frames, the 15 minutes, the 5 minutes, the 1 minute, depending on your trading style. So now we see this break in structure, or this area that we highlighted in the market. We see that break happening. We look at 1 hour time frame, you can see a clear break. We look at the lower time frames. So now what do we see here? We see a nice little bearish candle in between the bulls. So bull, pushing up, pushing through, there we go. So that is going to be your swing low. And again, this is where countless times I've showed you, keep an eye out for these little candles in between all the candles that's moving in the direction. If it's bearish candles and there's a bullish candle, a small little candle in between, use that as either support or resistance area that you'll swing in the market. So there is going to be your swing low. That's going to be a swing high, as you can see price retracing. So what we do is we highlight this area in the market. It does not show on the 1 hour time frame. On the 1 hour time frame, like I showed you just now, we missed this trade. So there, right there. Look at that. Price tapping. That's 62% area. As you can see, it goes deeper in it and more, and then it starts shooting. So this is the area that you place your trade, your buy trade. More confirmation. Okay, on a 4 hour time frame, you have a feeling of the direction in the market because of the COT reports. At the top there's some liquidity that needs to be taken out. Okay, smart money does that. You see the break of the structure. You see the direction price is starting to move into. You have your Fibonacci from your swing low, swing high, retracement 62. So this is just ticking those boxes. Okay, I've got this, price moving back, poof, that's my buy opportunity. I feel more secure and more positive because of what's all happening. I've ticked all the boxes, and lo and behold, price starts shooting up. Okay, that is what we need to do, guys. You need to have those tick boxes in place. Okay, so now what happened? You missed your trade. Like, oh damn, I missed that. It's not, I missed the trade for the week and whatever the situation. I missed that move. No, you did not. You never miss a move because there's always going to be moves in the market. Okay, there's always going to be possibilities of trades in the market. So now what we're looking at is for another retracement. So now you can see there's a swing low right there. There's a swing high, swing low, swing high, retracing to the 62%. Bam, that's another opportunity. We looked at the 1 hour time frame. We did not see any opportunities going my way on the 1 hour time frame. We did not see that. So where's if you were in the first trade, that's going to be your first target, and bam, first target already reached. Or not first target, second target. First target is going to be your 0, second target your negative 100, already been reached. But we know we've got these areas in the market up here. So I'm just taking this out. I don't want it to be too cluttered. We have got these lines in the market. Remember, we drew it on the 4 hour time frame. We drew it there. This is the area that price is going to be moving into, or at least taking out those areas in the market. Okay, so now again, second opportunity. If you are in the first buy, price does this, enter another one. Just have your risk in place, guys. Just move those stop losses up. When you are in a trade like this, in the first trade, and you go and you enter another one, move your stop losses up, move your risk up. So if price fails and goes down from here, you at least have some profit to be taken. You can take partial profits, but move your risk up. Don't just leave your stop losses down here and you enter another trade and you leave it. Just move your stop losses, guys. That's what you need to do. Just make sure your risk is in place. So now, excuse me. So now we ended a second opportunity in the market. Okay. So now what we want to do is we want to see price hitting that area in the market. We know, or we've got a feeling price is going up. So now we just ride price. Okay. Again, now what you did is, oh, I've missed another opportunity. Okay. Always look for more opportunities in the market. Okay. So price went up, it came down. Okay, it's up and down, up and down. So price moved up, moved down. I'm just going to take this out. So now we have another swing low. We have a swing high over here. Price did not reach that area. So what I do is I just move my Fibonacci up a little bit. Okay, so from the swing low to that swing high, let's have a look. So I just move it up, move my Fibonacci to the side. I just highlight my areas in the market that I want price to retrace to. Price has not reached that previous high in the 4-hour time frame. It is still there. Oh, maybe we can catch another opportunity before it reaches. Oh, bam. Look at that. There. Price moves into that area and starts shooting up again. Okay, I'm just taking this out. Like I said, I don't like my charts to be cluttered. Price moved in, third opportunity. Okay, you could have scored big time in this currency pair this week. Okay, depending on your trading style. Okay, price moving up and starts taking out those highs. And look what happens. Price just bounces or just pushes through them. Okay, and now price is just, and what I wanted to show you as well, those previous highs in the market, you know, there's always something happening there. Okay, might be another opportunity. And look at this. Once it started taking out these liquidities, it just had a huge movement to the upside. All right. So that is always, and look at how price just moves into that fair value gap area on the 4-hour time frame. That area has not been touched yet. So that is what price does. Okay, price comes down, excuse me, and then price just starts moving sideways again, coming down, coming up. But I mean, guys, you know that you need to highlight those areas in the market. If you were in this buy for this week, you would have caught a lot of pips. Okay, so I want you to just practice this. Practice, practice, practice. Okay, that's all I want you to do for this week. So currently what we're seeing is now, okay, if we quickly look back to the CO2 reports, we see a positive movement in the net positions. Okay, a positive movement going into this week. So what can we expect? We might expect price moving downwards again. Okay, guys, I've got on the 15 minutes, I've got a swing high, got a swing low, price not reaching my 62% yet. Okay, price did not retrace back to that area yet. So what I want to do is I just want to see what price does this week with this low. And I want to see, I've got you can draw your high up here as well. Okay. But what I want to do is I just want to move my high a little bit lower. Just want to see what price does, you know, in between these two areas in the market. Will price just move up to that 62%, or is it going to start just carrying downwards, break that structure and move downwards? So let's see what happens with USDJPY with this week. So guys, I hope you enjoyed this analysis. And if you did, Don't forget to hit that like button, hit the subscribe button, hit the notification bell, comment in the comment section, guys. Let me know what you think. Let me know where you're struggling in the market. And yeah, let's see if I can help you. So guys, I hope you've been having a wonderful week. Stay safe and happy trading, guys.